Hey guys, Kevin Gillespie here, Lakeway Lending team, and just wanted to share with you some things going on and why there is no bubble in the housing market. And there won't be. First of all, we got a lot, we know the news, they like to hype everything that, oh my gosh, things are changing. The housing, boom is officially over. The truth is housing's going to continue to be strong for the next several years. And I wanted to share with you why we think that and the experts think that. Is the conditions today are quite a bit different than they were in the early 2000s when we had the housing crash, especially in terms of credit availability and new home starts. So let me share with you what I mean. First, back in 2006, just before the bubble burst, right? There was over $376 billion worth of mortgages originated with people with credit scores less than 620. They were also not requiring much of a down payment. If you had a job or you could breathe, you would qualify. But since the housing crash, the underwriting standards got much tougher. And today, less than 74 billion and 220 have credit scores less than 620. And the overall credit availability is much less. The loans are underwritten to a much higher standard. The people have more down payment. They have much steadier jobs and income. And so that is one factor that means that these people, if there was a little pullback, they wouldn't necessarily go into default. Also, what you got to look at, the decline in long-term construction of single-family units. What has happened is back in the mid-2000, 2006, right at the crash there, 7, 8, 9, home builders had a lot less that they were able to build, right? They didn't have the credit to build. They didn't have the capital. And so over the last decade, they have built millions of homes less, which means there's millions of homes less in inventory. Less inventory, continued higher pricing. And then people say, well, wait a minute, what about all the people who went into forbearance? Well, it's nowhere near what they thought it was going to be. They were first predicting about 30% of forbearance originations, right, that went into forbearance, we could have problems with. Well, today, we're down to 3.5% because at the very peak of COVID last year, $5 million were in forbearance, not making their payments. Today, it's down to 2 million, under 2 million people, and those people are getting worked out. Now, there'll be a few that go into foreclosure, but it's not going to be the rapid craziness we saw in the early 2000s. Why? Because these homes have equity. If they do get into trouble, they can sell them and get out of them. So the lack of inventory is going to continue to push prices up. Probably not at the rate we've been seeing because that was not unhealthy, but it's getting back to a very strong, very healthy, above normal appreciation the next 2 years. Ivy Zellman, who's probably one of the most sought after experts on housing prices and what the markets are doing, says there's a 0% chance of having a foreclosure crisis. The other thing that's going on is if you look back that the average millennial, according to Zillow, is 33 years old. Well, if you went back 2006, right, and looked at what birth rates were doing, there was a drop 33 years before that. You could see that drop. But now what's happening is there's a lot higher birth rate, which means higher formation of households being developed. In other words, more millennials are coming into the market every year, and that's going to continue for the next several years. You can see here in this chart, it's a couple of years old, but you can see that the formation of household growth is well outpaced annual completions for new homes. So if you went back 33 years from today, these millennials are just coming into the market and it's going to continue on. So the housing market should stay strong for the next several years. And the challenge you're going to have, especially here in Texas, is the cost of waiting to buy because of a couple of things. So I wanted to share that with you. here's an example, $350,000 home. And if they wait 6 months, a year, 2 years, 3 years, what's going to happen? We're going to use estimated projections of appreciation for the marketplace. Pretty strong this year, then it slows down a little bit next year and slows down. But over 3 years, you'd still have 11 or 12% appreciation. At the same time, you have the Mortgage Bankers Association, Fannie Mae, all predicting that interest rates are going to go up. We're already starting to see it. There's signs of inflation in the economy. You can see these interest rates if they continue to tick up. So what this next couple of slides does is project how much more it's going to cost them to buy if they wait. You can see for the people who wait, if you waited 6 months, you'll need a little more in down payment, right? $2,000 more versus a year, you'd need another $5,000. If you wait 3 years, $7,000, almost $8,000. If you wait, then at the same time, those interest rates are going up, your monthly payment, because you have a higher priced house, right? You put down a little more money, but your loan amount's a little bit higher. So that along with the interest rate, your monthly payment's increasing. So you take that annualized. Then let's look at the appreciation. You're going to lose value from two things. The amortization that you would have paid down on a mortgage if you bought today versus the appreciation that's projected. So if you waited, let's say 1 year here, you're going to lose $25,000 in appreciation estimated and $5,000 in paying down the mortgage. So that's $31,000. You combine both those payment differences and down payment plus the appreciation, you can see just 1 year, it's $31,000, guys. 2 years, $44,000. 5 years, it could be $57,000. The housing market's going to stay strong. We believe it. We'd like you to get in now. We think that's a good thing if it's the right thing for you. So again, Kevin at Lakeway Lending, we'd love to help you. We would be honored to help you. We always watch out for you. So give us a shout. Here's my number, 512-202-5109 or Kevin at Lakeway Lending. I'd love to help you. I hope this has been helpful information. Best of luck to you.